All right, today we're going to decode a really deep technical analysis on the pharmaceutical giant Pfizer. We're going to see what the data actually says about its potential as an investment. Let's jump right in.
So this is the big question on everyone's mind, right? Pfizer just made a huge acquisition to build out its drug pipeline. But does that make its stock, that's ticker PFE, a smart buy right now?
Okay, so before we dive into all the technical stuff, let's just cut to the chase. The report we're breaking down sets a target price of $33 a share. Now that's a pretty significant jump from where it is now. The real question is, how on earth did they get to that number?
So yeah, the report's final call is a strong buy, mainly because they think it's undervalued and has some good things coming down the pipeline. But why? Let's break down the evidence they used to make that pretty bold call, step by step.
All right, first up, let's just get the lay of the land with Pfizer's report card. Think of this part as a quick checkup on the stock's vital signs, just to see its overall health when this report came out.
Okay, so everything we're about to talk about really centers on this one number, $25.06. That was the stock's closing price on November 14th, 2025. And this was a really key moment, because the market was still trying to figure out what to make of that massive acquisition we just mentioned.
Now here's where it gets interesting. Look at where that price sits. It's way closer to its 52-week high than its low. And according to this analysis, that positioning shows a kind of quiet strength in the stock. It's a subtle but really positive sign right off the bat.
Okay, but what about risk? Well, that's where this number comes in, 0.612. That's Pfizer's beta. All you need to know is that beta measures how jumpy a stock is compared to the whole market. Since this is under 1, it suggests Pfizer's actually less volatile. It could be a pretty stable place to be. You know, a classic defensive stock.
Okay, so we've got the basics down. Now let's get into the good stuff, the specific technical signals that are flashing green and pointing towards that strong buy rating.
So, first, we've got something called trend indicators. These are basically the tools that help analysts see which way the wind's blowing for a stock. Is it heading up or down? And how strong is that move?
And for Pfizer, the trend signals are looking pretty good. The report says that while the trend is a little weak right now, it's definitely starting to build up some steam. You're seeing hints of upward momentum, and the stock is moving right along with the rest of the market's positive trends. All good things.
Next up, we have momentum indicators. And you know the easiest way to think about these? They're like a speedometer for the stock price. They tell you not just the direction, but how fast it's all happening.
Now, the report goes super deep on the technicals here, but here's all you really need to know. A key indicator is showing a bullish crossover. And all that means is that the buying momentum isn't just there, it's actually picking up speed. It's accelerating.
This next point is a big one in technical analysis. It's all about support. Essentially, key price averages are sitting below the current stock price, which acts like a floor or a safety net to catch it if it starts to fall. That's a very encouraging sign for traders.
Okay, but it's not all sunshine and rainbows. A good analysis has to look at the risks, right? So even though the report is positive overall, it does point out a few things to be careful about. Let's look at those potential headwinds.
This is where things get a little tricky. Trading volume. On one hand, it looks like buyers are snapping up shares. But on the other hand, a different indicator is warning about a potential volume trap. That's basically a red flag that the buying strength might not be as real as it looks. It could just fizzle out.
And look, not every single indicator is screaming buy. A couple of important ones, the RSI and the MFI, are just neutral, stuck in the middle. This suggests the stock isn't overbought, but it's not a screaming bargain either. It's kind of just waiting for something to happen to give it a push.
So, you've got the good signs, and you've got the cautionary flags. Where does that leave us? Well, the report actually breaks it down into 3 possible scenarios for what could happen next. Okay, scenario 1, the best case. The good momentum just keeps rolling, the new acquisition pays off, and the stock punches right through that 25.57 resistance level. A strong move above that would be a huge positive signal.
Then you've got the flip side, the bearish case. This could happen if the price drops below that key support level we talked about, around 24.77. You know, if those neutral indicators start to dip, or if that nice dividend just isn't enough to keep people buying in. And the third option is basically the wait-and-see scenario. The stock just kind of chills out, moving sideways around that 25-27 pivot point. It would likely just coast on low volume, waiting for some big news to push it one way or the other.
All right, so we've looked at the bull case, the bear case, and the neutral path. After all that, what is the final verdict from this deep dive?
let's bring it all home.
You know, this quote from the report really just says it all. It says Pfizer maintains bullish undertones and that those are enhanced by acquisition and dividend stability. And it's all pointing back to that target of $33 analyst upside because the stock is seen as undervalued.
And that's really the bottom line of this entire analysis. Yes, there are some risks. There are absolutely some mixed signals you need to be aware of. But when you put everything on the scale, the weight of the technical evidence definitely leans positive.
And that leaves us with the big question for you. This analysis shows a possible road to that $33 target, but it also clearly highlights the hurdles and the risks along the way. So you have to ask yourself, based on all this, does that potential reward outweigh the risk for your portfolio?